This is the briefing for Friday, July 1st. Well, first of all, today's trading was really not that significant, although we are in front of a long holiday weekend and typically volume is fairly low. A lot of traders take off and leave early on days before holiday weekends like this. So volume was extremely low. I'm not sure we can really make a whole lot out of what happened. There are a couple important things, but as you can see, this was today's trading right through here. This is the spiders. This was yesterday's trading, and in last night's briefing, I talked about using the extremes of yesterday for trade location, because trading much above the high of yesterday was going to open up the possibility of trading up to this 390 area, and trading below the low of yesterday would open up the possibility of trading down 370. Unfortunately, we spent most of the day as an inside day within the range of yesterday without breaking it. It wasn't until the last few minutes of trading that we actually saw a break of yesterday's high, and I certainly wasn't going to take a long position over a long weekend like we're having in front of us. We do have an inside day in the Qs. You can see that right through here. This was yesterday's high, yesterday's low, and then of course an inside day. Now typically an inside day, at least in my experience, means that the market is tightening and that typically you're going to get a breakaway from that. And you can see if you drew a triangle, you can see how it is tightening up and the range is getting tighter and tighter. So a break of that is going to give us a pretty good indication of the next greater degree move. Now also in last night's briefing talked about the fact that this is a three-step counter trend rotation, and we know that because volume was declining during that whole thing, and that we've not really seen an impulsive move except to the downside in a longer term perspective. Also, this leg one is approximately equal to leg three. It came right in the area. It wasn't exact, but it came in the area. And then the other question that I have now is that whether this is developing into something even greater in degree of time and price, where this is a leg one, this is a leg two, and leg three is in the process of developing. Now, what I found, and this isn't a high probability, but it is something that I have noticed, is that a lot of times when you get these three-step counter trend moves, that the second step is about 50% of the first leg. And I did that measurement yesterday, and that came in right around 376 area. You can see we came in right down to about the 374, 373 area. Well, that's not really, I'm not saying that we're going up in that third leg, but certainly that's something that we have to keep in mind as a potential possibility. That right now there's an intermarket divergence, and you can see that right through here where the spiders have traded above yesterday's high, and the NASDAQ has really not even approached yesterday's high yet, pretty close to the middle of the range. Important support in the spiders is 370, and really it's going to be yesterday's low, because breaking yesterday's low is going to open up a test of 370. And then if that's tested, then that would open up a test of the low on June 17th. And the same thing in the NASDAQ, breaking through about this 277 area is going to open up the potential to test this June 16th low in the Qs. Now I want to point out one other thing, and I almost hate to do this because I know that people get excited when you see a chart pattern like this, but I feel like I would be remiss if I didn't at least point it out. Now, in both of these instruments, the spiders and the Qs, we have what looks to be a head and shoulders top. Now, if the spiders trade much above this level here, I would say above the, that is the high is the 382 area. If that trades much above 382, I think that would negate this head and shoulders top. But you can see in the Qs it looks even more like a head and shoulders top. So the necklines, really, the neckline comes in on the spiders, comes in at the low at 372.56, and in the Qs it's going to come in at this low right around the 276.50 area. So if that's broken, then you can potentially determined by the length of the head to the neckline, the approximate distance that the market could travel. Now, the reason I hate to bring this up and point this out is because it appears to be a head and shoulders top, especially in the Qs, but it is not a head and shoulders top until the neckline's broken and we see some type of thrust to the downside. If that's not broken and we trade much above the 286 area in the Qs, then that's going to suggest that this is not a head and shoulders top, and we're going to see rotation back through the range to test 295. Now, the way I trade this is I'll wait for the neckline to be broken, unless I've got some shorter term trade strategy or trade tactics that would be within this area. And certainly I'm going to look to be long above this 286 area as well in the Qs. And I'm going to be watching what happens here with the spiders coming in right around this 382 area as well to the long side of the market. Now, breadth expanded nicely in today's trading. There's really no divergence to the downside. This was not a lower low than this, and breadth it strengthened throughout the whole day. And the same thing with the NASDAQ, it strengthened through the whole day, even though we had a low volume day. Looking at the longer term charts, and I want to point this out again also, is this chart pattern, this is the spiders on a daily basis, and you can see this move to the upside here. And back then I was saying that this is a counter trend move, mainly because volume was not increasing, it was decreasing, suggesting that it was not becoming impulsive. It was losing buyers, it wasn't gaining buyers. And that led to this thrust to the downside, which was a very impulsive thrust. You can see with the gaps in it. Now we've got this next rotation up, and the same thing is occurring. Volume is falling off, and then of course we have to wait to see what happens in Tuesday's trading. Remember, Monday is a holiday. Now, looking at the same thing with the NASDAQ, the same thing occurred with the NASDAQ. You can see this move here, volume fell off. Then we get this move here, volume fell off, and it led to this move here. So I'm very skeptical of this market to the upside, at least as of today. Same thing in the IWM, volume falling off on the rotation up, volume falling off on the rotation up. So I'm skeptical of the long side of this market right now, unless or until I see volume beginning to increase on the moves higher, because these rallies that we're seeing as they develop are not attracting new buyers. In fact, they are losing buyers as it goes forward. I think today was a little bit of an anomaly. I'm really surprised to see it as high as see the market up as much as it was, mainly because it was a holiday weekend. Volume was extremely low, and if buyers wanted to drive it higher, they were able to drive it higher because sellers just weren't around. Now, looking at one more thing, we are at a point of being or at least approaching overbought territory in the NYSE, not so much in the NASDAQ, but I don't think that's going to have much of an effect on what happens on Tuesday's trading. I really believe that when everybody comes back from the holiday after the 4th, that we'll be able to determine the next greater degree move, whether it's going to be a 1, 2, 3, potentially up to this 405, 408 area in the spiders, or whether this is a head and shoulders top and we're done and the neckline gets broken and we're going to see some type of a move to the downside. I'll pick this back up on Tuesday after Tuesday's trading. Hopefully the market will give us a little more information as to the next, not short-term move, but the next greater degree time and price move, because those moves give us this type of a situation where it's much easier to trade and to make money, as opposed to this type of situation where there's a lot of chop, and even in this type of situation where there's really no impulsiveness either to the upside or the downside. Have a great holiday week. Happy 4th, and I'll pick this back up on Tuesday.